Hey guys, thank you for coming back. Today we will be going over the chapter three of the Florida Contractors Manual, and this is financial management. So the next page you have your table of contents, front and back page. Also on the third page you have more table of contents. This is part 2. And here's the beginning of the book, page 311. Or 310, you want to highlight bookkeeping versus accounting. Bookkeeping, accounting. You want to get familiar with those two terms. On page 311, second paragraph, where it says amounts owed to a supplier who has given you credit are called accounts payable. Down below, things owed still equal the claims against things owed. Then down below, because the summary always balances, we call this summary of things owned. Balance sheet. Things owned are listed on the left, and claims against things owned are listed on the right. Assets, liabilities, equity. Things owned by the company are called assets. Claims by others are called liabilities. So you will most likely see this on your business and finance exam, guys. Assets equal liabilities plus equity. This statement is the basis of accounting and is accounting's single most important concept. It is called the accounting equation. So this is something you really want to get familiar with. Page 313, changes in equity. There are two ways for equity to change. They are investments or withdrawals by the owner and earnings or losses by the company. Now remember guys, whenever you guys see numbers, you make sure to highlight them and circle them. That way it's gonna pop up and it's easier when it asks you a question about this particular question or this particular sentence here. The numbers will pop up if it's a question that has numbers on it. Page 315, revenues are the money a company is paid or expects to be paid for goods or services it provides its customers. Page 316, when to record revenues and expenses. Revenue is recorded in the financial records at the time the title or ownership of goods or services passes to the customer. Page 317, all the way in the bottom, this method of accounting for revenue and expenses when they are earned or incurred rather than the cash is actually received or paid is called the accrual method. So this is another very important term to try to remember and to go over it at least 3 times. Page 318, the categories under assets, liabilities, equity, revenue, and expenses are called accounts. Page 320, debit refers to the left side of an account and credit refers to the right side of an account. Similarly, accounts which have balances on the left side of the balance sheet have debt balances, and accounts which have balances on the right side of the balance sheet have credit balances. So this whole page is talking about debits and credits. Page 321, the act of increasing the account balance of an account that has debit balance is called debiting. Instead of saying debiting the account, we could say debt the account. Next one, the act of increasing the account balance of an account that has a credit balance is called crediting. Instead of saying crediting the account, we could say credit the account. Page 323, The reason for having separate income statement is that it provides information on how the earning on the balance sheet were arrived and over what period of time. Page 325. The journal under why and how. Fourth paragraph. The journal is a company's primary record of all its business transactions. Transactions are recorded in the journal before they are recorded on the financial statements. Down below, second to last paragraph. Second sentence, a chart of accounts is a list of all the accounts by their account number. Page 328, the ledger. This section tells you how to use a ledger to keep track of detailed account information. Why and how, down below. Ledger, of which each page is detailed record of one account, for example, accounts payable. Then you have posting. The process of transferring information from the journal to the applicable ledger account is called posting. Then you have manual accounting. Journal entries are posted to the ledger account in batches, usually at the end of every month. If you guys have been in accounting, you are most likely familiar with this, and this will be a lot easier for you. But this does have to do with accounting terms. So page 329, the balance sheet. The balance sheet categories include current and fixed assets, current and long-term liabilities, and equity. Assets. Assets are all the physical things and other items of value owed by a company. They are listed on the left side of the balance sheet. Fixed assets. Fixed assets are assets such as land, buildings, equipment, and trucks that are used in operating the business and which have long life. Liabilities. Liabilities are all the debts and money owed to others by the company. Current liabilities. The term current liabilities generally refers to liabilities that are due to be paid within a year or less. Long-term liabilities. Long-term liabilities are liabilities that are not due to be paid within the next year after the balance date. 330. The income statement. Categories on the income statement include revenue, expenses, and income. Page 332. An accounting period is the period of time over which income is calculated. Down below, most companies actually do choose an accounting period of 1 month. Prepaid expenses. Prepaid expenses are assets that have been paid for but which will become expense over time. Insurance is a good example. An insurance policy is an asset. It is paid for in advance, will last for a period of time, and expires on a fixed date. You buy insurance to cover you for the whole year. You should allocate its costs evenly over the year. So this is another very important one. They probably will ask you this question. Page 334, depreciation and taxes. The MACRS, Modified Accelerated Cost Recovery System. You guys make sure to highlight this and go over it a little bit because they will ask you a question about this. Amortization of intangible assets. For all practice purposes, amortization is essentially another way of saying depreciation, except that amortization implies that the cost of an item is written off in equal amounts over a period of years or months. Page 345, why and how. Subsidiary ledgers are a system in which a particular ledger account, such as accounts receivable, has its own ledger called subsidiary ledger. The purpose of the subsidiary ledger is to keep the main ledger uncluttered of details and provide management with the useful and necessary information. Page 346. Open invoice accounting for payables and receivables. Open invoice accounting keeps track of each individual invoice, together with each partial payment made against it. Page 347. Discounts. The open invoice method provides sufficient detail to allow you to take advantage of discounts offered by suppliers for each payment or for their invoices. Page 349. Salary. Salary is a fixed amount paid to the employee for a period of question. Pay period in question. You have SIT, state income tax. Make sure you get familiar with that. You have FICA. Get familiar with this as well. Social Security tax and Medicare tax. Page 355. Determining the employer's associated expenses. The wage expenses are statutory expenses that must be paid by all employers. They are Social Security tax expenses, Medicare tax expenses, FUTA, which is Federal Unemployment Tax Act expense, and SUTA, State Unemployment Tax Act expenses. FUTA, Federal Unemployment Tax Act expense. Make sure you go over this as well. SUTA, State Unemployment Tax Act. Whenever you guys see a highlighted title, just make sure you go over it a little bit. You don't have to go over the whole pages. Page 358. FOB, free on board. FAS, free alongside ship, or CIT, cost insurance and freight prepaid. CIF, actually. 359. Inventory items being used on a project should be recorded by requisitions which indicate the transfer of inventory to the project. Accounting control of inventory. Accounting control of inventory can be carried out by several methods. First in, first out, which is FIFO. Last in, first out, which is LIFO. Item by item, and average cost. This is another very important one. You should go over at least 3 times and try to remember where you can find accounting control inventory in the book. LIFO stands for last in, first out, and means that the goods last added to inventory are assumed to be the first goods sold from inventory. Average cost is the simplest method and is the method discussed in the following paragraphs. Average cost is a method of determining a unit cost for inventory based on adding the purchase cost of new inventory to the present cost of existing inventory and then dividing this amount by the combined number of items in inventory. When you guys are looking for answers, I'm going to show you later on in different videos how to go through the index and look up certain topics for that answer. 363. State sales tax. When a company purchases an inventory item, it may have to pay a state sales tax, depending upon whether it is tax exempt or not. 365. Local sales tax. If you sell an item to a purchaser who is not exempt from local sales tax, you will have to collect this tax on all items that are subject to local sales tax. The local sales tax rate is usually added to the state sales tax rate, and then the combined rate is applied to the selling price. When it comes time to remit your state and local taxes to the government, you must remit the total amount collected for both to the state government. Cost accounting. Cost accounting is a system of allocating costs and expenses incurred to a particular division, department, or project so that management can quickly determine if the division, department, or project is meeting its budget or earning the company any money. Page 366. Methods of maximizing your business cash flow. You have these check marks here. Make sure to go over all these, and get familiar with this. Next page is 371. Types of capital. Startup capital. Starting capital is the amount of money needed to get the business underway and should be enough to cover expenses for 3 months to a year, depending on the type of contracting business. So this is most likely, they're probably going to ask you what is startup capital. So you would come to this page and go through the sentence. Okay, so page 372, expansion. To qualify for expansion financing, some programs and financial institutions require that you have been in business at least 2 years, while 5 is preferred. So this is if you're trying to get a loan. Make sure to circle the numbers, guys. This is going to help you remember, keep this information in your brain, and it'll help you a lot during exam day. Page 373, principal. The amount of borrowing, the principal plus interest, will be the amount to be repaid. Term, the length of which the loan is made. Rate, the effective annual rate of interest which will be paid on the principal borrowed. Ordinary interest loan, also known as simple interest. This is the interest computed on the loan principal. Page 374, we have discount loan. The actual amount of cash received in a discount loan will be less than the principal amount due at the end of the loan. The difference between the cash received and the principal due at the end of the loan is known as the discount. For example, a $10,000 loan is obtained on a 9% discount basis for 1 year. The borrower will only receive $9,100, $10,000 less 9% or $900. The $900 is known as the discount, and the effective interest rate will be higher than 9% because the borrower is paying $900 to borrow $9,100 for 1 year. $900 divided by 9,100 is 9.89%. So you guys should go over this a couple times. After a few times, you should be able to get it. And I will go over this later on in other videos to explain it how exactly. Page 376. The estimating process will vary from contractor to contractor, and the method used is not important as long as it produces a good estimate without taking excessive time. Down below, if the contractor does not know what cost will be incurred to perform a certain task, it is very difficult to intelligently submit a bid to an owner and will provide for sufficient gross profit to cover the contractor's other operating costs and some net income, which is often main contributing factor of contractor's failure. The preparation of an estimate typically consists of the following steps: determining the quantities of labor, material, and equipment, determining what, if any, portion of the job will be performed by subcontractors and getting bids, assigning appropriate prices to the quantities, finalizing the bid with the appropriate markups for profit, indirect costs, and overhead. Page 377. Indirect costs are those costs that are not part of the direct physical construction project. They include such things as the following, and it's these here: payroll taxes on direct labor, fringe benefits for the direct labor, construction supervision, temporary costs such as for an office trailer and temporary utilities, miscellaneous job cleanup costs, indirect labor such as for secretarial help, timekeeping help, field engineering, and warehouse help. Down below, it is critical that each contractor develop accurate job cost records which measure performance as the job progresses against the estimate for the contract. Page 378, change orders. The change order is a contract modification agreed to by the owner and the contractor that changes the contract as originally agreed upon. The change order can be initiated either by the owner or by the contractor. A lot of this information will be on your AIA documents as well. Types of contracts. The nature of the contract. Risk exposure varies with the type of contract. There are 4 basic types of contracts used in construction: fixed price or lump sum contracts, unit price contracts, cost plus contracts, and time and material contracts. In the exam, guys, they will also ask you questions about types of contracts. So this page, make sure you go over a few times as well. Highlight any numbers. So down below, fixed price contracts. Fixed price or lump sum contracts provide for a single price for the total amount of work to be performed on a project. The contractor is obligated to deliver the product to the owner specifications at the price upon which the owner and the contractor have agreed. Unit price contracts. Unit price contracts provide that the contractor will perform specific work at a fixed price per unit of output. Cost plus contracts. Cost plus contracts are contracts which provide for reimbursement of defined costs or incurred plus a fee for the contractor's services. Time and material contracts. Basis of direct labor hours at fixed hourly rates and the cost of material or other specified costs. Down below, the percentage of completion method. This is a key question in your exam to try and remember. The percentage of completion method is also required for tax purposes for construction companies with 10 million or more in annual sales. Completed contract method. In general, a contract in excess of 98-99% completed should be recognized as complete under the completed contract method. Now, this in the test it will ask you a question about this, but in the builder's what book is that? Builder's Guide to Accounting, instead of 98-99%, it says 100% complete. So be careful with this question. Page 383, retainages. Okay, so page 383, retainages. Retainage terms vary, but the most common ones are to retain 10% on all billings until the end of the contract, or to retain 10% on the first half of the contract with no retainage on the last half, resulting in 5% retainage at the end of the contract for the entire contract. 384, overhead expenses. 389, types of financial ratios. It is useful to classify ratios into 4 basic types: liquidity ratios, leverage ratios, activity ratios, profitability ratios. Liquidity ratios. The current ratio is determined by dividing the total current asset by the total current liabilities. This ratio is viewed as measure of the solvency of entity. A 1-to-1 ratio is viewed as minimal. A 2-to-1 ratio as good, and higher the ratio, the better. Page 393, methods of acquiring the asset: renting for the job at hand, lease the equipment, purchase the equipment. Page 396, payroll taxes requirements. Page 397, miscellaneous tax issues. By April 1st of each year, business in Florida required to file a tangible personal property tax return, each with each Florida county in which they had tangible personal property of January 1st of that year. Page 399. This is the highest level of financial statement and is called an audit. The letter the CPA provides is in this instance is called an opinion. Page 3104, revenue recognition accounting methods for taxes. 4 basic methods are available to contractors. There's the cash method, accrual basis, percentage of completion, and completed contract method. Page 3105, you have the glossary, and keywords here are accrual method, a method stating income whereby revenues are recognized in the accounting period in which they are earned, not when the payment is received. This is very important. You will get asked a question about this. Back charges, bad debts, bid shopping. Those are keywords to get familiar with, or definitions. You have critical path method, very important. Front end loading, make sure you guys go over this. A procedure under which progress billings are accelerated in relation to costs incurred by assigning higher values to contract portions to completed in the early stages of a contract than to those portions to be completed in the later stages, so that cash receipts from the project during the early stages will be higher than they otherwise would be. You have progress advantage billings, stop order, and substantial completion. All right, here, page, let's see what's next. Okay, I think the next one is, we have Davis-Bacon Act. This is very, very important, guys. This will be on your exam, so try to remember this. Later on, I will go over where to tab your books, but you definitely want to tab this book for sure, and highlight and circle the key numbers. The Davis-Bacon Act. The Davis-Bacon Act requires the payment of prevailing wage rates, which are determined by the U.S. Department of Labor, to all laborers and mechanics on federal government and District of Columbia construction projects in excess of 2,000. Construction includes alteration and or repair, including painting and decorating of public building or public works. Let's see what else we have here. We have one here on page 131, overtime. Overtime hours are defined as hours worked on the contract in excess of 40 hours in any work week. Overtime hours must be paid at no less than 1.5 times the regular rate of basic pay, plus the straight time rate of any required fringe benefits. I'm pretty sure you guys are familiar with that term if you have been in the field. Next one, guys, is Circular E, Employer's Tax Guide. Very important. On page 155, you want to highlight Social Security Medicare tax for 2021. The rate of Social Security tax on tangible wages, except for qualified sick leave wages and qualified family leave wages, is 6.2% for the employer and employee 12.4% for both. And then you have the Social Security wage base limit is $142,800. The Medicare tax rate is 1.45% each for the employee and employer. Unchanged from 2020, there is no wage base limit for Medicare tax. Page 157, Federal tax deposits must be made by electronic funds transfer. You must use EFT to make all federal deposits. Generally, an EFT is made using the electronic federal tax payment system. Page 158, hiring new employees. Eligibility for employment. You must verify that each new employee is legally eligible to work in the United States. This includes completing the U.S. Citizenship Immigration Services Form I-9. New hire reporting. You are required to report any new employee to a designated state new hire registry. Information returns. For example, you must file Form 1099 NEC, non-employee compensation, to report payments $600 or more to persons not treated as employees, for example, independent contractors, for services performed for your trade or business. Then you have federal income tax withholding. Withhold federal income tax from each wage payment or supplemental unemployment compensation plan benefit payment according to the employee's W-4 and the correct withholding table in PUB 15T. Page 160, record keeping. Keep all records of employment taxes for at least 4 years. These should be available for IRS review. Your records should include the following information. So this is another very important one, guys. Make sure you circle the years. And it's going to ask you about record keeping for employment taxes. Page 161. By January 31st, file Form 941. Alright, guys, page 361. By January 31st, file Form 941 or Form 944. File Form 941 for the fourth quarter of the previous calendar year and deposit any undeposited income, Social Security, and Medicare taxes. Page 162. Furnish Forms 1099 and W-2. Most Forms 1099 must be furnished to payees by January 31st, by April 30, July 31st, October 31st, and January 31st. Deposit future taxes. File Form 941. If you timely deposited all taxes when due, you may file by May 10, August 10, November 10, or February 10th. They will ask you a question about this as well, guys, so make sure you go over this at least 3 times and circle the key numbers. Let's see what else we got. On page 177, we have Social Security Medicare taxes. The Federal Insurance Contribution Act provides for federal system of old age, survivors, disability, and hospital insurance. Page 178. For 2021, the Social Security tax rate is 6.2%. Amount withheld, each for the employer and employee, 12.4% total. Qualified sick leave wages and qualified family leave wages aren't subject to the employer share or Social Security tax. Therefore, the tax rate on these wages is 6.2%. The Social Security wage base limit is $142,800. The tax rate for Medicare is 1.45%. Amount withheld for each of the employee and employer, 2.9%. Page 179, you have payment with return. Your payment 941 total tax liability, Form 941, line 12, for either the current quarter or the prior quarter is less than $2,500, and you didn't incur a $100,000 next day deposit obligation during the current quarter. Page 181. Semi-weekly scheduled depositors have at least 3 business days following the close of the semi-weekly period to make deposit. Alright, guys, page 183. Deposit penalties. For amounts not properly or timely deposited, the penalty rates are as follows: 2% deposits made 1 to 5 days late, 5% deposits made 6 to 15 days late. We have a good skip here. And landing on page 3190, only the employer pays feudal tax. Page 3191, figuring feudal tax. For 2021, the feudal tax rate is 6%. The tax applies for the first $7,000 you pay to each employee as wages during the year. Generally, you can take a credit against your feudal tax for amounts you paid into the state unemployment funds. The credit may be as much as 5.4% of feudal taxable wages. If you're entitled to the maximum 5.4% credit, the feudal tax rate credit is 0.6%. Depositing feudal tax. Stop depositing feudal tax on an employee's wages when he or she reaches $7,000 in taxable wages for the calendar year. If your feudal tax liability for any calendar quarter is $500 or less, you don't have to deposit the tax. Instead, you may carry it forward and add it to the liability figured in the next quarter to see if you must make a deposit. Feudal tax carried forward from the earlier quarter, you must deposit the tax by EFT. See section 11 for more information on EFT. When to deposit feudal taxes. If they say March 31st, it's due by April 30. They will ask you guys questions about feudal taxes, so make sure to underline or circle the numbers, the percentages, and also the amount of money. Next we have we have one here on page 3193. Family employees, child employed by parent, exempt until age 21. Parent employed by child. Then we have severance or dismissal pay. For workers' comp, it's exempt. Income tax is exempt. Social Security is exempt. And feudal is exempt. Alright guys, that's it for chapter 3. On the next chapter, we will go over chapter 4, risk management. So thank you guys for joining. Please like, comment, and share with anybody that you think will be interested, and this will be helpful too when passing the Florida General Contractors exam. Thank you.